Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is the best way to exit your highly appreciated asset. I'm your host, Brett Swarts. Each episode, I am joined by some of the best real estate, financial, business, and wealth minds in the world, where they share their ideas, deal stories, and inspiration so we can together make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's actually a repeat guest. He is one of the founders of PassiveInvesting.com. He also is one of the founders of Multifamily Investor Nation. His passion is helping educate people and also help his partners, friends, family create and preserve more wealth through value-add multifamily real estate. We're excited to announce the opportunity to work with Dan Handford and his team to bring our clients opportunities to invest in more multifamily deals. Please welcome to the show with me, Dan Handford. Hey, Dan, how you doing?
Doing great. Thanks for having me on. Appreciate it.
Absolutely. Excited to dive in today. For our listeners getting to know you for the first time, would you give them a little bit more about your story and your current background?
Sure. So I'm actually an actual investor myself in all of the properties that we have put together ourselves. And I'm also a passive investor in 39 different passive LP positions inside of multifamily, as well as some self-storage assets, and actually one food hall out of Nashville, Tennessee, kind of a unique one there. And one of the main reasons why I got into real estate was because of taxes. So I have a group of medical clinics that I own and that I run. And when I was I still have those today, and I still cash flow those 100%. But when, at the end of the year or even quarterly, had to write these large six-figure checks to the government, was a little frustrated with that. So I started to do some investing inside of real estate, and then started the private equity real estate firm, PassiveInvesting.com, to be able to bring on other investors that were in similar situations that can also help to offset some of their taxes that they had to pay on a regular basis. So before I even got into real estate, I started those medical clinics. I also started a couple of online companies selling. One of the main ones is a company called shopanatomical.com, and we sell all types of medical models like skeletons and skulls and brains and hearts and those types of things. And so when I was in chiropractic school, which I started as a chiropractor, but when I was going into chiropractic college, that's how I started that business. And then in chiropractic, learned all the tricks of the trade, if you will, in the chiropractic side of things. Started my own clinic. Realized I was kind of stuck in a job, even though I was working for myself. And that is what allowed me to think about trying to hire on other people that can do the things that I do. And then quickly decided to change the clinic from a kind of a single disciplinary clinic from chiropractic to doing what's called a multidisciplinary clinic, doing medical procedures as well as chiropractic. And then about 5 or 6 years ago or so, we actually completely removed the chiropractic services in the office and so solely focused on the medical component of it, because it was a niche that was underserved in the markets that we were in. And we grew from 1 clinic to 4 clinics, and we primarily do non-surgical orthopedics and some sports medicine. So we do a lot of prolotherapy, PRP, stem cell, and stem cell treatments for orthopedic conditions in those clinics.
So a serial entrepreneur would be an understatement for you, Dan, right? You started out as a chiropractor and then moved into some other products related to health. And then all of a sudden found out, oh my gosh, I have all this cash flow and I'm hitting with all this tax. What's a good way to offset and minimize that tax? Let's own some investment real estate. Is that a fair summary?
Yes, that's correct. So it's one of those things where I needed to find a way to be able to offset that offset that taxable liability, and that's what I had to go into and do it. So, and I would definitely agree with the assessment that I'm an entrepreneur. I have multiple businesses, and I enjoy the busyness of it, and it also allows me to be able to have the flexibility and the freedom to be able to do what I wish to do.
Beautiful. And now you're on a mission to help others to be able to do the same, right? Because essentially, if you can invest passively or actively, at a certain point, hopefully the cash flow offsets your expenses, right? And that gives you back your time, right? And your energy, and
Correct.
perhaps even your stress if you can find trusted folks who are experts in what they do. And I've been following Dan now, I think for about 5 years now. And I first attended Multifamily Investor Nation a couple of years back, and had a chance to be on his podcast as well. And what I love about what you guys do is you focus like a laser on multifamily value add. Now, mainly in North Carolina, South Carolina, although you've done, I think, a deal in another deal in Texas and Tennessee, and you're looking at Florida and Texas. Love those locations. But walk us through what you're seeing right now when it comes to inventory and returns, and maybe a recent deal that you've done for multifamily for passiveinvesting.com.
Sure. So one of the most recent deals that we did, and kind of in a value add space, was actually out of Raleigh, North Carolina. It was actually a $57.6 million acquisition. And this one we were raising right about 21.5 million from our investors, 21.49 to be exact. And this one's 288 units, and it was very well occupied, 97% plus when we acquired it. And it had about 50% of the units that still needed to be renovated from the prior owner. And so we were able to acquire this property and raise the funds to be able to do the renovations on those those vacant units, $5,000 to $7,000, and not vacant units, but the $5,000 to $7,000 in the classic units or the non-renovated units, to be able to bring them up to where we want to be able to get them for the current market rents. And of course, this one's a value add deal, so usually there's going to be a kind of like a 3 to 5 year hold. We model our projections on the underwriting on a 5-year hold period.
Excellent. And these are for accredited investors, of course. So you've got to be there. And all of our clients that are selling and using the deferred sales trust to defer their capital gains tax are accredited investors. Our minimum deal size is $1 million, and that automatically qualifies them net equity in the deal. So but one of the biggest challenges is, hey, how do I invest the funds once I have them? What are some of my options? I'm not a big stock market person, right? I want options. I want to be able to diversify. I'm more comfortable with real estate. And so finding value add multifamily opportunities to be able to passively put in is a big benefit for our clients. That being said, what are some questions that clients should be asking when they're meeting folks like yourself for the first time, and also bring in the Multifamily Nation, Investor Nation, how you're educating and equipping syndicators like yourself, operators like yourself, to grow their business? Could you kind of touch on that?
Sure. So the first part of your question was about what are some questions that you should be asking operators before you actually invest with them. And, my wife and I, like I said earlier, we invest inside of other multifamily assets as an LP. And we're right now invested within about 14, 15 different operators across the country, and about in those 39 different investments. And being able to vet operators up to this point, we actually wrote an article and kind of put together our heads to kind of figure out what are the 7 red flags for investing in apartments. And I'm not going to go through each one of those 7 items here today, but if your listeners want more details on that, they can go to our website, passiveinvesting.com. Inside the Knowledge Center on the top, there's a little link there for the Knowledge Center. You can just type into the search box under the Knowledge Center red flags, and you will find this article so you can get some more information in there. But one of the biggest things is that I want to make sure that there is someone at the helm of the operations team that has some form of background in business. They've actually been able to run a business before, and not just run it. I want to make sure they have a successful background in running the business, because I think you and I both, Brett, have probably met people that know how to run a business, but they know how to run it into the ground, right? And so I want to make sure that with my passive investments that I have for my family, that it's being managed by somebody who actually has a background in business and understands how to make pivots, how to make changes, how to actually set certain KPIs and parameters in place so you can make changes whenever it's necessary instead of when it's too late. And so that's one of the key things that I look for. And then I also want to make sure that they are full-time in the business, because this multifamily space, there are a lot of people getting into the space trying to be their own syndicator and raise money, but they're also trying to hold down a W-2 job at the same time. And I'm not a big fan of that. So my wife and I have worked very hard for the money that we have, and I know our investors have as well. And so we, when we place capital inside of other investments, we always make sure we ask the operator, are you full-time in the business, or are you treating this more like a nights and the weekends kind of hobby type gig, right? And so I feel like with our money, we want to make sure that we have full-time efforts that are watching it every single day. And obviously, being an active operator in the business, I realize that this is a full-time business, right? And it needs to be treated as such as well. So those are a couple of the things that we look for that I would suggest other people asking operators before they're actually starting to invest with them. Obviously, there's other things about having skin in the game and things like that, and making sure that there's preferred returns and kind of a different nuances that we like to see in our own portfolio. But those are some of the things that we like to see.
Excellent. Yeah. So full time in the business, always make sure that they have actually run a business, right, successfully. So
Successfully.
They actually,
That's the key.
because when you're buying a multifamily property, you're not just purchasing a property, you're purchasing a business, right?
It's an existing business.
Yeah, this is now a business that happens to be in the business of renting to tenants and getting good return for your investors. And so there's a lot in there, and then of course skin in the game, right? And yeah, and like you said, not a side hustle, but a full-time effort here focused on that. And that's for the operator, right? But sometimes there's, not to be confused, there's an operator, there's those that are raising the funds, right? There's those that are out there marketing, building relationships with brokers and other owners of properties to source the deals. So walk through just a couple of those roles, and I think of passive investing, how you guys have set up your structure.
Sure. So yes, some people might say, well, how can I get into this business while I'm still working the W-2? Well, you can partner with other people and like Brett said, and still do certain aspects of it. But I don't think that you should be the main operator on a property when you're still working the W-2 job. That's kind of really the big distinction. So I know people that still work a W-2, but they do part-time asset management work, or they part-time work with investors and raise some capital for projects, and then also participate in some of the asset management duties, in between, different calls and stuff like that. And there's also from like our three managing partners, we have different roles and responsibilities. So my role is marketing and investor relations and overall strategic objectives of the company. And then we have Brandon Abbott on our team. His primary responsibility is acquisitions and on the capital expenditure side of things, for looking at what are the capital expenditure budgets and things that we need to do for these various properties for the value add side. And then Danny Randazzo on our team is his lane and focus is all about finance. So he does all the financial underwriting, the financial due diligence. He works very closely with our lenders and our broker and our mortgage brokers, as well as our attorneys and insurance people, to make sure that the properties are running smoothly. And he also does the asset management side of things as well.
Excellent. Let's touch on investor relations, because it's one thing to acquire the property, implement the business plan, but then there's a whole other thing with communicating and making sure that people are understanding, what's going on. Quarterly reports, financial statements, distributions. Walk us through your systems and how you've set that up to make it as seamless for the client as possible.
Sure. So the main thing that the investor is having to worry about is keeping track of their distributions and making sure at the end of the year they receive their K1s and on a timely basis, right? And so from that perspective, it's pretty straightforward. It's pretty easy. We do monthly distributions on all of our assets. Two of them right now are on quarterly, just because of potential concerns with some cash flow problems or whatever with COVID-19 and stuff like that. But the rest of the assets are still on their monthly original distributions, and we've still been able to maintain those distributions even on the quarterly. It's just we're doing quarterly instead of monthly right now on those. But when it comes to asset management, we actually have a full-time director of asset management who is on the phone calls every single week with our on-site property management team to make sure things are being done properly on each one of those assets. And then usually a couple of times every other month, he's actually going to the properties and actually putting boots on the ground or doing that on an as-needed basis.
Excellent. Fantastic. So COVID-19 and, at least here in the West Coast, and I think most of the US too, from a lot of my clients and the connections that I have, rents didn't drop much and vacancies didn't go any which way. Are you concerned, or what do you think? Do you feel like the storm is behind us here? Do you think it's going to hit apartments very hard, or what's kind of your take given 2021 and what we've been through in 2020?
Well, I think we can look at the economic stability of multifamily in general and other recessions where there hasn't really been a major economic hit to the multifamily assets. And it's one of the reasons why we always say that multifamily is a recession resistant type of an asset, because next to food, putting people's food on their table, they're going to pay for the roof over their head. So it's a necessity that no matter what kind of market conditions you're in, you still need a roof over your head. So collections have been strong. And we have also seen rent growth in the markets that we're in. And so we're going to continue to see that, I think, because we're seeing a lot of people moving from these downtown kind of urban core infill areas to the suburban areas. And we're also seeing, especially here in the Southeast, from places like New York City, New Jersey, Boston, we're seeing a lot of people migrating out of those areas and coming into the Southeast. And then also people from the West Coast doing the same thing, but they're primarily migrating into, say, Boise, Idaho, Phoenix, Arizona, and then into the Texas markets at the same time.
Yeah, 100%. I've had some friends even go further, all the way to Tennessee. Three friends in particular and their families, and they're about my age, late 30s, and they're like, you know what, we're looking for a different pace of life, a different set of taxes, and ways to raise our family in a different place. So that is absolutely happening. I think Tesla, Oracle, and HP all announced in the last 150 days they're all going to Austin, Texas, relocating, their headquarters there. So that's a big, big deal. That being said, for investors who want to learn more about you, Dan, and your team, what's the best place for them to find you? And also touch on Multifamily Investor Nation, right? And your vision for that, and where that's going, and how maybe that's changed this past year as well.
Sure. So you can reach out to me and follow us by going to passiveinvesting.com. You'll see on our website there, it's pretty straightforward. There's a box in the top right-hand corner of the screen that will allow you to join our Passive Investor Club. So you can fill that form out, and one of our team members from our investor relations team will reach out to you, discuss your investment goals, to see if our group is the right fit for you. And then if you wanted to connect with me directly, you can go to linkwithdan.com. It's just linkwithdan.com. That'll basically take you directly to my LinkedIn page, where you can connect with me there and follow some of the content and the material that we put out there. And then, of course, we do have, like Brett said, the Multifamily Investor Nation. So we have information on that website. You can go to multifamilyinvestornation.com. We have weekly training videos that we do every single week. We've been doing that now for a couple of years, and providing value to you and so you can learn how the business actually works. So whether you want to do it actively, or maybe you're just a passive investor trying to learn a little bit more about the nuances so you know how to properly vet a deal. That's another reason why you'd want to follow us and pay attention there. And then, of course, we have our MFIN Summit. We do those twice a year. They are virtual, all online. They've always been that way. We didn't do it just because of COVID. Actually, in June will be our 6th Multifamily Investor Nation Summit that we've done. And you can find more information by going to mfinsummit.com and researching that a little bit further.
Beautiful. A last question, and then we'll let you go. And it's tied around the whole solution that we're trying to provide here, which is capital gains tax solutions. So this is the question: what's the biggest frustration, Dan, when it comes to capital gains tax deferral, especially if you're looking to raise funds or connect with investors who have high-end primary homes, cryptocurrency, right, businesses, and they want to defer that capital gains tax, and they want to invest with someone like with you, Dan, like with your group, but they feel trapped. What have you found to be the biggest frustration there?
Well, it's understanding the tax law, right? I mean, when you have a big taxable event, your frustration is, how can I keep as much of that money as possible close to me for as long as possible? And so usually what you'll see is these people will that have businesses that they're selling, or stocks that they're trying to offload, whether it be cryptocurrency or other high value stocks. They're trying to figure out a way to properly exit those, to be able to set themselves up for success, or to hold on to that money as much as possible. And it's a concern, because especially for somebody in the business side, right? So you work all these years to build your business up, and you get to the point of being able to have this really nice, successful exit, and you realize that you have to pay a lot of that money into the government for taxes. But if there's a way for you to have a vehicle that you obviously provide, Brett, that can help people, avoid or kind of reduce that taxable burden and that liability, it could be a win-win for sure.
Yeah, we absolutely always say defer versus avoid, right?
Yeah.
Because all we're doing is we're deferring the capital gains tax, kind of like a 401k or an IRA, right? You have the government gives these legal loopholes to put in place so that one, it spurs the economic growth, which spurs more tax revenue, and then two, incentivizes the seller to actually sell the asset and capture that value and redeploy it to something like multifamily investing, where it creates jobs and housing for people, or even stocks. It grows companies. So it's actually all a win-win-win. Yes, you can learn more about that, by the way, by going to capitalgainstaxsolutions.com and learn about the deferred sales trust and how it can defer cap gains tax on the sale of primary homes, investment real estate, cryptocurrency, stocks. In fact, we just did a deal in Colorado, Dan. It was about a 50-unit apartment complex and about a $5 million sale. And they had a zero basis, and they're older and looking to retire, not wanting to do a 1031 again. And they were able to sell, defer the tax, as well, did some estate planning as well to help them out as well. So that being said, that's all we have time for, Dan. I appreciate you being on the show. Everybody look for the show to drop on iTunes real soon, but you can go to YouTube right now and review this. I appreciate you. And anyone who wants help with tax deferral, feel free to reach out to us at capitalgainstaxsolutions.com. Bye, everybody. Welcome to the Capital Gains Tax Solutions podcast. This is an intro to our full podcast with Dan Handford. He is the founder of Multifamily Investor Nation and PassiveInvesting.com. Value add multifamily, mostly in North Carolina and South Carolina. And we're going to have the full interview, but I have Dan here for just one question. And this is the question, Dan. What's the biggest frustration when it comes to capital gains tax deferral for high net worth clients or partners or friends or family for other asset types besides investment real estate?
Well, like we said on the podcast that we just did, it's one of those things where when you have a taxable event, whether you're selling a business or you're selling some high value stocks, whether it be cryptocurrency or something else, or you're selling real estate and you have this big capital kind of tax gain event, then the biggest frustration is trying to figure out how can I keep as much of that money in my pocket as possible for as long as possible. And so being able to have the ability to, defer those taxes into a deferred sales trust and things like that are really, really beneficial for you as you're trying to walk those different steps and being able to figure out how can you keep more money in your pocket for as long as possible.
Yeah, 100%. The biggest thing we found is taking something that's, let's say, illiquid and or not producing cash flow, right? Such as like a cryptocurrency or such as a highly appreciated business that's maybe producing, 500,000 of income, but you could sell it for maybe 15 million or $20 million, and someone else could come in and double that. You capture all that value, or even a primary home. We just did a deal in Palo Alto for 8.3 million. These are a lot of times either non-cash flowing producing properties or assets, or low return on equity assets. And so when you can capture that value and take that, either you call it lazy money or dead money, right? Dead equity, and then move it into value add multifamily properties or other assets that are going to help you grow your wealth, that gives you more wealth, more freedom, more options, more diversification. By the way, you can learn more about that at capitalgainstaxsolutions.com. Any last thoughts on that, Dan, before
I was just going to say, I don't know any business that's only generating $500,000 in revenue you're going to sell for 15 million. That's a pretty nice equity multiple, but I do understand the concept of trying to be able to take that 500,000 and exit, and maybe it's a 5 to 7x multiple depending on the business, but sure. Definitely being able to kind of tap into that kind of dead equity and put it into work for you to be able to increase that cash flow.
100%. Yeah, exactly. That's probably not a good number for me on the 15. maybe it's more like the like a 3.5. I'm trying to think. I'm doing a deal right now. Actually, it's interesting. It's I just listed the property today. It's a multifamily property. They have no basis. It's about a $2.6 million sale. They bought it for about 1.2. And, so they've ran out of that depreciation and they're cash flowing about $120,000 NOI per year. And so we did the simple math. We said, okay, 120 on about 2.6 gives you a return on equity, I think, of about 3%. And I'm saying if we capture that value, put in the deferred sales trust, which is the plan, and then go redeploy that, we can probably increase your cash flow by about $50,000 to $60,000 per year, like immediately. And they're like, oh, that makes sense. And we can get a new depreciation schedule too if you do an active. So lots of ways to carve that out. The key is to get clarity on that. Go to capitalgainstaxsolutions.com, learn more about that. And for Dan, for those who want to get in touch with you, learn more about Multifamily Investor Nation and or investing as an accredited investor, what's the best place for them to find you?
Sure. You can go to passiveinvesting.com and fill out the questionnaire there about joining our passive investor club. And then one of our investor relations team will reach out to you, discuss your investment goals, to see if you're the right fit for our group. And then if you want to join us on the Multifamily Investor Nation, you can go to multifamilyinvestornation.com or go to mfinsummit.com to check out our event that we do twice a year. And if you want to just connect with me, you can go to linkwithdan.com. That'll take you directly to my LinkedIn profile. You can connect with me there and follow some of the content that we're posting every regular weekly or monthly content.
Beautiful. Thanks, Dan. And look for the full interview to drop. It's actually on YouTube right now, but it's going to be on iTunes. And we're talking about Dan's story. We're talking about deals, talking about COVID-19, talking about collections, talking about the future of real estate and investing. Also, you can create and preserve more wealth or help your clients do the same. Hey,